Hey, this is Larry Gonzales with your Mortgage Market Minute. This is an update on what's going on in our economy and our housing market across the world, across the nation, locally, and here in Oahu. All right, so as I start out every week, please like, comment, or subscribe. Love to get your feedback. I love all your feedback, just to be honest, but I respect it all. All right, so what we got going on here? Prices are coming down. We'll talk a little bit about that. Rates. You know what rates are on? We're on that roller coaster still, baby. Got to put on that seatbelt. We'll talk about that. And we'll talk about inventory. Inventory's down. It's not really coming up, and it won't come up probably for another month or two. We had a new month, October 3rd. Man, it's a beautiful day. I've been married for 30 years on October 3rd. That's right, this Monday. And you know what happened on October 3rd? Mortgage-backed securities shot up like 100 basis points. It was great. The world celebrated my 30-year anniversary with interest rates coming down. All right, it was beautiful. But new month and rates dropped. It was beautiful. If you recall, last week we had 20-year high for mortgage rates at 7%. Well, they dropped at least half a point, a little more on Monday. And that was largely due to basically, hey, a new month and a lot of excitement over, what was going on. Fed chairs, presidents kind of came out and were saying, hey, we might need to wait a little bit before we get too crazy raising Fed funds rate. We got to look and see how the economy reacts. And then Tuesday, the UN said no mas. They pulled the Roberto Duran. They said no mas, central banks. Stop raising the Fed funds rate. All right, they said it to our bank. They said it to the central banks across the world. And you know what? Australia was like, hey, that's a good idea. And they raised their Fed funds rate equivalent by 25 basis points. They were thinking 50, but they only raised it 25 points. They loved it. The market was very excited, and rates went down again on Tuesday. Well, then on Wednesday, OPEC said, hold my beer. That's right. OPEC said, hey, you know what? We're going to stop producing oil. We are going to decrease our daily output by 2 million barrels a day. Take that, global economy. Well, let me tell you, OPEC, the Organization of Petroleum Exporting Countries, it's OPEC Plus because it's the original 13 plus 10 other major oil producers in the world. They said, hold my beer. But the impact to our economy, not just our economy in the U.S., but across the world, this is going to be pretty epic. All right. And why is that? This summer, gas prices, they peaked over $100. And then in June, they started to come back down. And they got down, I think we're around $80 a barrel. Well, OPEC wants to jack that price up to over $100. And who benefits from that? Putin, he's going to benefit because guess what? He's one of the major players in OPEC Plus. The more money he makes, the more money he can put into his war coffers so that he can continue to wage war in Ukraine. This is a slap in the face of the rest of the world, in particular our administration, because President Biden just went over to OPEC countries and said, hey, you can't stop producing. Matter of fact, you got to produce more. No, they're not going to produce more. They're going to produce less. And that is not a good thing for the rest of the world. Because guess what? They stopped producing oil by 2 million barrels a day in November. All right, what's happening in November in Europe? It's freaking getting cold. It's going to be really cold. I don't want to be in Europe in November. It's cold. Germany, all these countries, it's going to be super cold. Energy prices are going to skyrocket. Energy prices in the U.S. right now are skyrocketing. Look at your electric bill. How is this going to help? It's not going to help us. I tell you what, the OPEC, man, that's going to hurt. So, hey, we had the ADP jobs report also came out. So we kind of got hit 1-2 on Wednesday. First it was OPEC, and then we got the ADP, which is a private sector jobs report. All right, the expectation was that we'd have more jobs, but not as many as we did. We had 208,000 jobs produced in the month of August. All right, a little more than what we expected. And on Friday, we're going to have the BLS, the Bureau of Labor and Statistics jobs report come out. And typically, there's a little bit of correlation between, actually there should be, you would think, between the private sector and the Bureau of Labor and Statistics. But every time that I can recall, the ADP said one thing, the BLS said another. So who knows? I'm not guessing. We need a bad jobs report on Friday. If we have a good jobs report, meaning there's a lot of jobs that have been, people have taken jobs, that's going to hurt. That is going to hurt us. That's going to hurt interest rates. Certainly going to hurt inflation. People who maintain the same job, their wages went up 7.7% year over year. If you switch jobs, 15.7% year over year, and that's wage inflation. Again, two of the big things that are hurting are going to have a huge effect on us are fuel, energy, wage inflation. All right, and while those numbers are down from the previous month, they're still too high. So CoreLogic came out with their home prices, and they showed basically in September home prices were flat. Expect to see a little bit of a decrease, I would say, pretty much across the nation. But they also predicted that for the rest of the year, so for the fourth quarter, that home price appreciation will be around 3 to 3.5%. And why is that? We're thinking, God, it's nobody's buying homes. Every day somebody's buying a home. Every single day somebody buys and sells a home. Inventory, you got supply chain issues, all right? There ain't enough free houses. As a matter of fact, I know D.R. Horton, they're giving a lot of incentives right now to sell their homes, and they're not doing the lottery. It's first come, first served. They got homes. They got people coming out, falling out of contract. They got to get them sold. So, man, if you can get in and buy a brand new home, D.R. Horton, hey, I do it, because they also have lower rates because they basically purchased their loans before the interest rates rose up. So you can get a really good deal. The problem is there aren't that many. So you got to move fast on that one. So home prices, again, pretty steady. Who's going to buy a home right now? Well, I tell you what, man, last week I had 5 or 6 contracts come in last week. Just about every single one of them had a seller buy down. All right, and what's a seller buy down? Basically, you use a seller credit. I've talked about this before. Use a seller credit to buy your rate down. Say the par rate was 6%. You use the seller credit to buy your rate down. It's called a 2-1 buy down. First year, you buy it down to 4%. And the second year is at 5%. And third year goes back up to 6%. But within 2 years, interest rates should come down. All right, as soon as we go into recession, all right, watch interest rates come down. It happens every time. All right. And here's a crazy thing. Not everybody knows about it. I talked to over 90 realtors last week, and most of them had no idea what I was talking about. All right. So the word is not getting out. Matter of fact, a realtor that I've worked with, he has a client. They're in contract. And a good friend of mine, David Perret, he sent this the buyer to me, and she was already in contract, and so I said, hey, can you send me your loan estimate? Send me what you're paying, and to get down to 5.5%. All right, her lender was charging her over $10,000 to get down to 5.5%. All right, and they had all these miscellaneous junk fees that they were charging her, and on top of that, she was going to set a $5,000 seller credit. All right, she was going to have to come into the table with $15,000. All right, I'm like, but you got this credit, and you could do a seller buy. And I talked to the realtor, and I talked to the buyer, and it's not too late. But they decided is what we could have done is with that seller credit, locked her in at 6%. Did a 1-year buy down to 5%. She'd save almost $200 a month on her mortgage payment that first year. And you know what? She's going to save $11,000 at closing. She's not going to have to pay. All right? Realtors, educate your buyers. Realtors, educate yourselves. All right? Because you could be a hero to your client. Take care of your clients, man. They're your family. If your lender doesn't know what a 2-1 buy down is, or if you're a realtor and you don't, man, come talk to me. Dude, we cannot do this to our clients because that buyer is now going to be out $15,000. That to me is criminal. All right. Know how to take care of your buyers. I'm a little angry about that because, I could have helped the client. And, but it is what it is. Educate. So that's my lesson for today. There's my soapbox. All right, sell or buy down, live it, learn it, love it. Hey guys, that's really all I got for you this week. Man, I hope you have a blessed weekend. Get out there if you're looking to buy a home and don't give up. All right, that's all I got. Have a great weekend. Aloha.